And for question 19, we have revenue recognition for chapter 18. And we have Monroe Construction Company uses percentage of completion method of accounting. 2014, Monroe began work on a contract it had received, which provided for a contract price of $20 million. Other details are as follows. So costs incurred during the year is $9.6 million. Estimated cost to complete as of December 31, $6.4 million. Billings during the year, $8.8 million. And collections during the year is $5.2 million. What should be the gross profit recognized in 2013? So let's see here. We have cost incurred during the year. So total contract price is going to be $20 million. And we have a cost incurred throughout of $9.6 million. We're saying that estimated cost to complete is $6.4 million. So we're expecting the total cost to be $16 million altogether. So how much complete is this project? Let's see. So we incurred this year $9.6 million out of 16. So it looks like it's 60% complete. Okay, so revenue was $20 million, but it's 60% complete, so I'm assuming revenue for this is going to be actually $12 million. So profit is going to be my revenue minus the cost so far. So it's 2.4 million, and the answer is C. So notice that what we really did is we just looked at total cost, and then we saw, hey, listen, this total cost is going to be 16 million, but cost so far is 9.6 million. That's 60%. That's 60%. So I'm going to count so far 60% of the revenue. Okay? And then profit is just revenue minus the expenses for the year. Now, moving on to question 20, same scenario here. And we're moving on to Kiner Company, which began work in 2012 on the contract for $12,600,000. And here's the data. Let's see here. So the first question asks us, if they use the percentage of completion method, the gross profit should be, okay. So we want to look at cost incurred to date. So that was 5.4 million. Right, so 5.4 million, and we had a revenue of 12,600,000. And additional cost at the time we estimated 3.6 million. Okay, so this thing is, we thought is going to cost us a total of 9 million. So for now it is 60% complete, and 60% of the revenue is going to be, we have this amount here, and the profit is simply that minus the cost. So I'm looking at profit of 2,160,000, and the answer is A. Okay, so the idea here is that the answer is A, and the reason is that we looked at total revenue, and then we multiplied it by the percent of the cost. And the reason I knew it was 60% complete is because I'm looking at how much cost I had as percent of total cost. I know total cost is going to be 9 million, and the current cost, 5.4 million, is simply 60% of that total cost. Then I'm just looking at total revenue. It said, hey, this contract is going to have 12.6 million for the total, okay? I'm going to look at 60% of that because it's 60% complete. 60% of that rev is this amount here, and now I know what the revenue is, and then revenue minus the cost is going to give me my profit.